Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Tuesday, April 16th. Not really any major economic news coming out today, but there's a headline. Powell says there has been a lack of further progress this year on inflation, which arguably sent rates higher. Certainly, we saw this in the Fed funds futures. Now, there's been a topic involving markets that I've been wanting to talk about that I've been kind of avoiding. There's a certain war going on between certain countries over in the Middle East that are supposedly driving markets lower in the US. And I can't help but laugh because, okay, if markets are going down because of potential war conflicts or whatever, that's not smart money speaking, that's dumb money speaking. War is great for economic activity and inflation. And making inflation go higher. What it does is it causes there to be a lot of fiscal spending increases. And so there's two ways that money is created. It's through commercial bank lending, creating credit basically, and more money gets moved around, and fiscal spending, where the government essentially creates money out of thin air, in the name of creating debt. That's where you get your treasuries from. And and so for stocks to lose valuation because potential war conflicts, the only valid argument really here is that oil prices might go up because the Middle East having conflicts might have the price of oil go up. But, there's other sources of oil out there, and we haven't seen oil spiking throughout this. And so it's all sort of fake. It almost seems to me like an excuse for the markets to start dumping so retailers continue to pour into markets while smart money's dumping into this. I laugh, but it just seems that that's what's going on here with me in my crystal ball, in the way that I see things. Moving on to the charts, I wanted to bring up the weekly time frame of the S&P 500, and as you can see, you have sort of a situation of the three white soldiers in the reverse here. Large-ish red candle. It's not tiny, it's not large, it's medium sized, larger and larger. Wait till Friday for this to fully play out, but when you have the three white soldiers is one of those typical movements that leads to a continuation of wherever you see this type of pattern. I wanted to point that out. Again, you have to wait till Friday for this candle to finish doing what it's going to do, but for now it looks very bearish. Heading over to the CMEgroup.com FedWatch tool, it's fascinating, the tools they have over here. If you click over here on historical, and you can take a look at the top here, these are the individual meeting dates when they decide what kind of cuts are going to happen or not happen. And so each one of these dates up here at the top represents one of these meetings, and it's fascinating to take a look at this chart here. Notably, we have almost with 100% certainty gray right now. At the end is like closer to where we are right now, basically. And the gray says that the top is 350, and a potential raise. So we were thinking, there's there's actually a good possibility of raising rates as far back as September 23. Still a larger point of no cutting for this meeting. This is the May 24 meeting. This is only for the May 24 reading and how markets are pricing what's going to be happening here. And then you go as far as December of 2023, and purple is dominating, which suggests two cuts actually, with a max rate of 3.00 to 25 basis, that being 225 basis point cuts, and then that going to absolute zero while this is taking over. It's very, what I find interesting is scrolling through these things, how this almost seems like a pattern of waves going up and down. And so we'll see what plays out from here. But moving on to the June, it's just amazing how we had such a much larger percentage of the a chance of there being a 450 or a 5% maximum, and then this gray of no cut, a 350 being, sorry, I mean 550 excuse me, being the dominant player here. I mean, the most fascinating thing about these charts is just seeing how much this can change. It's like a slow moving, it's like a turning ship almost. It doesn't turn quickly, but when it turns and it keeps turning. I mean, it's fascinating to really visualize these charts here. But anyway, Powell was talking today about basically saying, hold on there, we're not seeing what we need to see in inflation. And obviously part of this is the fact that honestly, the stock market's not turning over. The wealth effect, the fact that people think they have a lot more wealth right now than they otherwise would if the stock market was lower, this affects inflation greatly. And I think that this largely contributes to his comments today. Any which way you look at it, it struck a lot of fear in markets in regard to there being higher rates for even longer than previously anticipated. He had been talking about for a long time 3 cuts this year, 3 cuts this year, 3 cuts this year. And what do we have now? If we scroll over to the probabilities tab, we have 2 cuts this year priced in by December of 2024, and we don't see a 3rd cut until April, a year from now, actually, in 2025. So obviously these things can change, and they do change over time. Soon as the market starts, soon as the economy starts seeing more of a slowdown, the idea of more rate cuts will be coming faster and harder and everything. But all of those people that have been saying, no, I don't see why there would be even 3 cuts this year, why announce cuts if there's no reason for cuts yet? They were right. I was wrong. I had been talking about for maybe a year now, if not publicly, I'd been saying in my head, hey, maybe we'll see more than 6 cuts this year. Maybe we'll see a greater slowdown than what's expected. And that has turned out to be wrong. Oh, there's a smudge on my crystal. Oh, yeah. No, I see it now. Fear and greed, going further into fear on the Fear and Greed Index on CNN. I do see markets turning over here. It'll be interesting to see if markets turn over enough, if the Fed funds start pricing in a cut, and then, like I've been saying on this show for a while, once we start cutting, we tend to keep cutting, and it tends to be behind the curve. We don't cut fast enough, and the economy keeps slowing down faster than what the Fed can manage. And so it's typical for that to happen. Will it happen this time, or will it be different? Nobody knows. Nobody has I'm the guy with the crystal. We're going to move on to some more charts here. This is the daily on The S&P 500 still breaking down, interestingly. Today we were waffling, if you're watching markets at all, between positive and negative. It's like, are we up for the day? Are we down for the day? And it's like, so, I mean, if this was the bounce, it wasn't much of a bounce. Now, granted, this is not like a three white soldiers in the S&P 500. We'd need to see a larger red candle than yesterday's a red candle for it to be looking even more bearish than this, but this is certainly not bullish. It looks to me like just a little bounce here, a little bit of a pause. I still think we're going to be heading lower, especially after such a crazy run up in markets. Equally in HYT, high yield corporate, the money that smaller corporations have to pay higher interest rates on because they're at higher risk for default and bankruptcy. We had what looks like a bounce today. Again, this turned out to not be a very clear three white soldiers scenario, unless if you counted Thursday, right? Thursday, if you counted that as the first red candle, maybe this counts, right? We have a red candle, larger red candle, larger red candle. Maybe this counts as that. I'm not sure. Don't really care. I'm still very bearish here. I think there's plenty of downside to happen. Again, on the retail side of this, it's all because of the war in the Middle East, right? That markets are finally turning over. And I'm looking at valuations and what the Fed's been doing and credit card debt and what some of these CEOs of these large companies have been saying, and I'm like, no. This is one of those classic, for me, it's one of these classic moments where I don't like to delve into conspiracy theories, but if there are central planners for the world and royalty that control things and puppet masters behind the scenes, what better way to do it than have bombs blowing up over on the other side of the world and be like, yeah, that's why the stock market's crashing. I laugh. It's a little like crazy, but time and time again, it seems to be happening this way. But I digress. Let's just get through the rest of the charts tonight. The VIX, we see, okay, it went down 4%. Yeah, that does not look like a top here. This is not a topping pattern. We don't even see, for a topping pattern, we want like a wick here at the top at least. This is a solid bar. This is not weak at all. This is the way it looks like is, to me, is traders taking some money off of the table and preparing for the next move up in the VIX. I expect more volatility ahead tomorrow. And for those of you that are saying, oh, the dollar is dead, everyone's gonna, de-dollarization of the world, everyone's running to gold and Bitcoin. Well, why is the dollar skyrocketing right now? Well, it's because the dollar is still the world reserve currency. Most of the debt in the world is still denominated in dollars. People depend on dollars more than anything. It's real money. I don't know what else to say. It's the most liquid, usable money on the planet still, and it looks like it's going to be that way still moving into the future. Yes, it can change someday. It's not even worth, to me, it's not even worth thinking about that potential future. Again, if this is like a major concern for you, gold won't help you, silver won't help you, Bitcoin won't help you. The only thing that's going to help you at that point, in my personal opinion, I don't know if I should say this on the internet, but to be honest, it's mostly ammo. Moving on, TYX, the 30-year Treasury bond. I am still loading into Treasuries right now. I wanted to point out a longer-term trend line here. If we take a look at this line here, if we were to count this as a shoulder and a head, I do see this as a potential shoulder, and if it is a shoulder, then we're probably near the top. However you see it, the Federal Reserve, Jerome Powell is set on this idea of an average target inflation rate of 2%, and if I have a return guaranteed for 30 years at 4.7%, 4.8%. Perfect. I'm fine. And if this interest rate drops, then I make a lot of capital gains, and that's it. You know, is 40% too much of an allocation right now? No, I don't think so. If anything, I feel like I'm going to be looking back at this situation wishing that I had gotten more into treasuries at this point, but you know, time will tell. Besides this head and shoulders pattern that we see perhaps developing, you know, today's candle certainly has a heck of a wick on top of it. This is an argument here. This is not a solid move. This is a potential top. You know, but we did have, you know, arguably we had a potential top on the 11th, similar kind of a thing. A doji, we have a tiny little candle with two big wicks. I would argue that this is even a more powerful candle just because the wick is taller and, you know, the argument is bigger, and I think this acts as a potential top here in yields on the 30-year Treasury bond. I said in previous shows that I would update my viewers on if I'm still short on the NASDAQ 100, the triple Qs, and yes, I am. You know, we were up and we were down, we were up and down. If you were watching this at all during the day, it was hilarious. One moment you're up 0.2%, and the next moment you were down 0.2%, and we ended up 0.01%. Now, the interesting thing about this number here is that, you know, after a bearish move, you know, usually you expect a bounce. Was this the bounce? If it was a bounce, it was a very weak bounce. I do expect this to continue to sell off here. Lastly, wood. This I had been talking about. I called this top here as looking like it would turn over, connected with a trend line that had looked solid, and it has played out just like clockwork. This has been very easy to follow, and today we continued lower. You know, I'll note, looking through my charts, I have seen a lot of big wicks here. There is a lot of arguments here in the markets, and so it's very interesting to see how things will play out from here. Again, things are getting very exciting in markets now, in my opinion, and yeah, very exciting. You know, typically the summertime is a very boring time for markets. Things seem to not make a whole lot of sense and move generally like frothily sideways, and nothing's really happening. There's things happening, and it's a very exciting time right now. Certain markets are collapsing, certain markets are flying high. Well, shorts are flying high right now, pretty much across the board. Anyway, that's all I have for you for today. I hope you enjoyed watching. Thank you for watching, and see you next time. Robschild.